Hello everyone, it is Evan from the Trade Risk here on Wednesday, January 13th with a market recap video. We're going to spend most of our time just analyzing the current market environment. Then we're going to get into a few other markets, probably skip the individual names because most of them sort of just showing broken charts in a downtrend or newly formed downtrend. And I don't think it's too exciting to go through a bunch of names that look the same. So let's get into things here with the S&P 500. We're looking at the SPY ETF, and it doesn't get much worse than this if you came into the day bullish. Now, we gapped up by about 0.5% in the SPY today, and those were the highs of the day. We couldn't make any progress, and in fact, if we zoom in here and take a look at where we found resistance at or where we stopped short today, it was right shy of this 195 level in the SPY. And you can see this was essentially the highs here from yesterday, from Tuesday, and it was also where a lot of the supply and chop took place back from late on the 7th and the 8th, so late last week. So this was an area where you could almost expect that buyers would have some difficulty getting through. We discussed this in the newsletter I put out on a bounce attempt. We thought that 195 would be your first kind of battleground for the market to try and get through, and it was a real easy fight today, and the Bears won as they just completely drove us lower today throughout the day, just in a very quick straight line, if you will, and we ended up closing, of course, below the lows from this week on Monday. Now, where we are now down here, sub 190, closing below 189, the next thing that we have to look forward to is the pivot lows from October down around 187. That was where the market turned around in October of 2015. So it looks like the market has, this beeline date with destiny to perhaps retest that. Now, we are very oversold on basically any metric out there, and we were pretty oversold on Friday. So again, Friday we were oversold, saying the same thing. Today we're even lower in the market. We're still saying we're oversold. So, take that with a grain of salt. You still have to manage risk above all and just figure out how you want to, get exposure and take profit out of the market. The key is you just have a very competing forces here. You have very, very strong momentum to the downside, but you're also dealing with a very stretched market. And at the very least, it's going to lead to a lot of volatility because you have such extreme sort of conditions here on the market. There's a tendency for this market to just rebound and recover some of these losses, as usually this kind of straight line selling is not sustainable. But you also just have such an urgency and a panic to just get out of this market, as demonstrated by the momentum and the sharp sell-off today and pretty much every previous day of this year. It's just two extreme forces, so you should expect that ranges are going to widen and volatility is going to remain elevated as well in the near term. So it's still best to remain cautious. We've tried to take some longs. We took some longs late last week on Friday, and then some more on this week. It's been really tough. Stopped out of basically all of them. We had a successful natural gas long that we took, but it's really tough to try and get in there. Even being quick and trying to take just 50 cents or $1 out of stocks, it's very tough right now. The environment's definitely shifted here, and it's certainly a time to be defensive. We have We picked up some gold today at the end of the day. We'll get into that later, but essentially no real long exposure on right now. And I know we can easily bounce here. Perhaps today was the washout. Willing to accept that, but it's just not too much for our strategy to really do right now. So the last comment I'll make is, given the way we closed yesterday with us on that strong surge late in the day, closing near the highs of the day, it would seem like the past few times this has happened, back in 2015, 2014, that sort of V-shaped rally that we were sort of all accustomed to, you would have expected that today would have seen some gains. It would have held in there. We wouldn't have completely got rolled over and closed on the lows like we did. So I think that's a small, again, change of character, that 2016 is a little different here right out of the gate. So hope that helps. Let's look at some other markets here. IWM, we'll go there next. This one completely taking out very, very clearly the prior day's lows from Tuesday. And if we go to a weekly chart, I think this is going to show the better picture here. We're trading at levels that we haven't really seen since 2013. So there is probably very limited supply in previous price history, at least immediate price history in here. And I would expect that price can move pretty quickly. Again, we are very oversold, so expect volatility, if not a snapback. It's going to be difficult for both sides, I feel like, to really sort of get their piece out of this market. And then the Qs continue to roll over here as well. A very sharp down, 3.5% day. A lot of the big leaders, or many of those big tech names, getting really hit hard today, putting a lot of pressure here. And again, going to a weekly chart, you can see, much like the look of the SPY here, you can see we're coming into some of these lows now from back in late 2015. You have to remain cautious, play defensive, take some small shorts, but small shots, not shorts, shots at the market, and just make sure you're managing risk and paying very close attention to that. Now, if we look at some other markets, TLT, nice continued surge here. So certainly where you're seeing a lot of money sort of flow to right now in such times of uncertainty. We're taking out this prior band of resistance here at around 124.50 to 125 on a weekly chart, starting to look pretty good here on a potential breakout. It's been consolidating nicely. See if this can continue. If equities continue to feel pressure, I would expect that bonds would continue to rally here. We'll have to see if that does stay to be the case. USO, this one giving back some of its gains. It looks like it's trying to hold in there. You can see some of these small bottoming tails here from yesterday and today. Again, all the momentum still racing lower. Still need to be concerned, perhaps oversold, but in this type of market, as we clearly know now, oversold doesn't mean a whole lot when when the trend is this strong. So be careful in USO. Natural gas, this one, now it's starting to actually try and put something together. It had its thrust off the lows. It's trying to hang in there. We did get some we did get some profit out of this on a breakout here on Thursday, took some profit on Friday, and then took the rest off and got stopped out of trailing stop on Monday. So we did manage to get a little bit out of that, not as much as we would have liked. It's now back here at some support down around 830 or so. Let's see if it can hold that. Otherwise, you have to start to think of maybe a retest in the lows is possible if these lows start to break and it does roll over. Gold, as mentioned earlier, we did actually get long this here. Not much is working. Gold does look fairly actionable here. It came back down, sort of retested this breakout level or this prior breakdown level, and it looked like it held it, closed on the highs today, willing to take a shot here for some continuation back to at least these highs. Not looking for a home run or a big call here, just a trade, trying to get a dollar or two out of this would be very nice. And then finally, let's look at silver, and this one caught a nice bit as well. You could see still under this prior breakdown area, so not too interesting, just because it hasn't quite cleared that resistance yet. Going to give this a little more time, but perhaps this will start to form and take shape like gold is, and break back above into this prior range from 2015. And that's all I'm going to go through today. So hope that helps. As always, thanks for watching, and I will catch you next time.